You smell that? What is that?
What?
What's that smell?
The cologne?
No.
Opportunity.
No. Money.
Oh, okay.
I smell money.
Okay.
Chris. God damn it.
Sorry.
This is your basic mortgage bond. All right? The originals were simple. They were just thousands of AAA mortgages bundled together, guaranteed by the US government. The modern ones are different. They're private, and they're made up of layers of tranches. The highest level AAAs getting paid first, the lowest rated Bs getting paid last, taking on defaults first. Now, obviously, if you're buying Bs, you can make more money, but they're a little risky. Sometimes they fail. Chris? Somewhere along the line, these Bs and double Bs went from a little risky to dog shit. Where's the trash?
Behind you.
I'm talking rock bottom FICO scores. No income verification. Adjustable rates, dog shit. The default rates are already up from 1% to 4%, fellas. And if they rise to 8%, and they will, a lot of these triple Bs are going to 0 too. And that, you're too close, is an opportunity.
Okay, you're saying that at 8% the bonds fail and we are already at 4%?
That's right.
If they go to 8, it's Armageddon.
Yeah, that's right.
How come nobody's talking about this?
You're completely sure of the math.
Look at him. That's my quant.
You're what?
My quantitative. My math specialist. Look at him. You notice anything different about him? Look at his face.
That's pretty racist.
Look at his eyes. I'll give you a hint. His name's Yang. He won a national math competition in China. He doesn't even speak English. Yeah, I'm sure of the math.
Actually, my name's Jiang, and I do speak English. Jared likes to say I don't because he thinks it makes me seem more authentic. And I got second in that national math competition.
So you're offering us a chance to short this pile of blocks? How?
With something called a credit default swap. It's like insurance on the bond, and if it goes bust, you can make 10 to 1, even 20 to 1 return, and it's already slowly going bust.
10 to 1, 20 to 1? No way.
And no one's paying attention. No one is paying attention because the banks are too busy getting paid obscene fees to sell these bonds.
But wait, you are the bank. When you work for the bank, I bet your margins are pretty nice and fat.
Let's not talk about my margins, by the way. Being nice and fat, that's a nice shirt. Do they make it from end?
Aren't you the bank?
I work for the bank. I don't think like a bank. Big bank, small bank, I like to make money. All right? Let me put it this way. I'm standing in front of a burning house, and I'm offering you fire insurance on it.
How can these underlying bonds be as bad as you say? It wouldn't be legal.
Nobody knows what's in them. Nobody knows what's in the bonds. I've seen some that are 65% AAA rated, that I know for a fact are filled with 95% subprime shit with FICOs below 550.
Get the fuck out of here.
You want me to really blow your mind? When the market deems a bond too risky to buy, what do you think we do with it? Take a guess.
I don't know, you tell me.
All right. You think we just warehouse it on the books? No. We just repackage it with a bunch of other shit that didn't sell and put it into a CDO.
A CDO.
Yes, a CDO.
What is that?
This is where we take a bunch of Bs, double Bs, and triple Bs that haven't sold, and we put them in a pile. And when the pile gets large enough, the whole thing is suddenly considered diversified. And then the whores at the rating agency give it a 92, 93% AAA rating. No questions asked.
Say that again.
A collateralized debt obligation. It's important to understand because it's what allowed a housing crisis to become a nationwide economic disaster.
This is what we did that no one else thought of. Not even Baum or Berry thought to short the double A's. But we did. Little brown hole capital.
So we're interested in shorting some of the AA tranche of CDOs.
Come on, guys, what's the aim?
I've got no angle. We're new to this. We're just so we want to do 15 million in swaps on the AA tranche.
I don't understand.
You can buy as much AA tranche as you want. 40 million against the AA.
Brother, I will sell you as much as you want.
You understand perfectly, Bob. Want the deal?
That's cool. That's all right with me.
Stop. Stop. Stop that. Charlie. Stop it. Stop.
What?
Do you have any idea what you just did?
Oh, come on, we just made the deal of our lifetimes. We should celebrate.
You just bet against the American economy.
Fuck yeah, we did.
Yeah.
Fuck yeah.
Which means,
Oh.
which means, if we're right, people lose homes, people lose jobs, people lose retirement savings, people lose pensions. You know what I hate about fucking banking? It reduces people to numbers. Here's a number. Every 1% unemployment goes up, 40,000 people die. Did you know that?
No.
Did you know that?
No, I didn't know that.
We were just excited.
Just don't fucking dance.
All right.
Where are you going? Whoa, I just got really scared.
First of all, great show today. You were terrific.
Thank you.
Your big mouth was a revelation.
I appreciate that.
You're worried you and your swaps are getting played? Well, this is an opportunity for you to meet who you're betting against. Try not to get too righteous and listen a little.
Okay, fine. Who is this guy?
And a real solid gold asshole.
I'm a CDO manager
A CDO manager.
at Harding Advisors.
I didn't realize that there was anything to manage with CDOs.
No. We select the securities that go into the CDO portfolio and monitor the assets. I do most of Merrill Lynch CDOs.
Do you represent the investors or Merrill Lynch?
The investors.
You do.
Yeah.
But Merrill Lynch isn't going to send you any customers unless you put Merrill Lynch's bonds in your CDO.
Good question. Let's just say Merrill and I have a good relationship.
You have a good relationship with Merrill Lynch.
We've been doing business together for a long
And so the CDOs that you create are of the highest quality and the highest of value.
Absolutely.
Absolutely. Are you at all concerned about the rising default rates?
I assume no risk for these products myself, Mark.
Okay. So let me get this straight. The bank calls you up. They give you the bonds they want to sell. They give you clients. They give you money to run your business. Give you fat fees for doing so. But you represent the investors? Is that right?
Yeah. But we're not in the Merrill Lynch building.
Okay. Where
We're
are
in
you?
New Jersey.
You're 20 minutes away.
Well, 5 Visa helicopter.
Okay.
It's funny, huh?
That's hilarious.
Oh boy. Your boss is about to explode.
No, he's
Hold
too
on,
curious to
hold on,
explode.
Hold on. Say that again. CDO A has parts of CDO B, and CDO B has parts of CDO A, but then they both get put inside CDO C.
Yeah, that one's called CDO squared. A CDO of a CDO. All right? And then there's CDOs made up of the opposite side of the bet you make with your swaps. We call them synthetic CDOs.
What did you Synthetic CDOs.
Synthetic CDOs.
That is fucking crazy.
It's not. It's awesome.
His face is starting to boil. He looks like the bad guy from Doom.
All right, let's say you have a pool of 50 million in subprime loans. How much money could be out there betting on it in your synthetic CDOs and swaps right now, tonight?
So 50 million. $1 billion.
What?
If the mortgage bonds that Michael Burry discovered were the match,
How much bigger is the market for insuring mortgage bonds than actual mortgages?
About 20 times.
if the mortgage bonds were the match, and the CDOs were the kerosene-soaked rags, then the synthetic CDO was the atomic bomb with the drunk president holding his finger over the button. It was at that moment, in that dumb restaurant with that stupid look on his face, that Mark Baum realized the whole world economy might collapse.